From the Retirement Calculator website, click on this file. Retirement Calculator process. When you first open the file, you'll need to make a copy so you can edit the sheet. So just do File, make a copy, and then you're good to go. If you don't yet have a G Drive, you can click on this link about how to create a Google account without Gmail. If you're not interested in Google Sheets, then the Excel version of the Retirement Calculator can be found here. Some written instructions are on this tab, and if you agree to them, you just click the checkbox. For the spreadsheet, input coloured cells only. All numbers are annual and in pounds. You put in your name as like first name and then the first letter of your initial. Put in your age as at the end of the tax year. Put in your annual pension contribution. You don't have to give the breakdown if you don't want to, but this is the full amount that's going into your pension. You put in your income after taxes and pension, which excludes any rental property income, so it's kind of what hits your bank account. Then if you make an annual contribution to an ISA, you put that in. Then we've got your disposable income that's calculated here. Next, you put in an estimated value of your house, what the mortgage balance is, the interest rate. It'll calculate the annual interest charge, and then you have to input the total mortgage cost. So it'll be the same as the interest charge if it's a repayment mortgage. Put in the mortgage end date, and that's the tax year that it relates to. Select the correct tax regime for yourself, so it's either England and Wales or Scotland. Then you can put in your desired expenditure in retirement, which you could compare to your disposable income after mortgage, and then your desired retirement age. You put in your balances on various accounts, so a stocks and shares ISA, all of your personal workplace pensions, any cash ISA that you might have, any taxable investment accounts, including a general investment account, and if you've got pensions already in drawdown, then you put the amount there, but you don't double count it with row 25. And then you put in the state pension qualifying years where the maximum is 35. Then you put in details of any defined benefit pensions and whether you're still contributing or not. So it's going to be the age at which you get the DB pension, what the annual payment will be, and if there's any tax-free cash that you can take. And these numbers are what you're going to expect when you reach the DB age. So if you're going to get £5,000 in 10 years' time, it's important to note that that's not the same as getting £5,000 tomorrow. So next up, we've got any goals in retirement, and these are like large amounts, maybe like £5,000 or more. So again, we're only looking at tax years. So for example, someone's university fees, you'd put in when they're going to start university, duration might be 3 years, and then amount you're going to give them per year. And these are just examples, and the whole sheet is optional. You get a maximum of 5 goals that I'm going to copy over. You can put in things for hobbies and studies, put in things for large purchases, put in things for your home, put in things for traveling or living abroad. A lot of the travel, though, will be captured later on in the phases of retirement when we go through the main model. Then finally, if you have rental properties, you put in the address of the property, purchase price, current value, mortgage balance, mortgage interest rate. It'll calculate the mortgage charge. Then you input the total mortgage cost, which if it's interest only will be the same as the interest charge. If it's repayment, it'll calculate what that repayment is, and this number must clearly be greater than 0. You put in the annual rent that you're getting on the property, the expenses excluding the mortgage, so that could be things like insurance costs and any maintenance costs. Then you put in who owns the property, so it could be you own it with your spouse, or you could own it just outright, or maybe your spouse owns it and you own nothing, so you just put that in here. And if you own a property with someone like your brother, then you'd put in your share at 100%, but then you just net off these numbers so that the current value would be half of what the property was worth.